Good morning, everybody. This is Patrick MontesDeOca. I apologize for that. We're moving into a fast market condition here in the gold market. The target was completed this morning at 1796, and we testing. Testing 1 2. Testing 1 2. Good morning, everybody. Once again, Patrick MontesDeOca here with the Equity Management Academy live trading room, live streaming from TikToker here. We got a fast market in the gold market here, trading last at 1777.78. We've been all over the place here this morning, completing the target of 1796. We recommended our traders to hedge, or pretty much once we completed the target, appear to look for a reversion to unfold. And that is basically the confirmation that we're getting from the market, reverting from the sell one level, not quite getting up to that 1800 resistance level, and also harmonically aligned, which is an extremely high probability that if the price had the strength to take out these levels here, that we can expect, according to the AI of the VCPMI, or the variable changing price momentum indicator, that we can expect supply to come into the market. And that's exactly what happened here. This is a mathematical calculation, an algorithm that essentially identifies the extreme levels above or below the mean. And when the price reaches this level of 1796, is at a 1590% standard deviation relative to the mean on a 1-to-1 factor. So you're looking at a 90% probability that when the price reaches here, as you can see, that it could revert back down to the mean. This is a perfect example of mean reversion trading, where the target, upon the target being completed, the reversion unfolds right back up to the mean or the level below. In this case, the market activated a short trigger at these levels here, and the target of 1786 was completed. Now, the fact that the market is trading below the average price and the price momentum broke this average price, activated now a bearish trend momentum. And the target automatically activated below is 1775 to 1765. Now, you can see here below 1765, 1762 is the weekly average. 1761.5 is a 50% Fibonacci retracement. The buy to level is 1765. So we are getting closer to the levels where the probability model reverses, basically. So at the blue levels, you're looking at the highest probability from buy one of a 1590% standard deviation to the mean. So Upon completion of the signal at 1775 and the trigger is activated, which means the market will revert back and close above it, it will activate a buy trigger signal from buy one. So far, right now, we are neutral from the trigger point pretty much that we got to on the daily one level here. And we have the sell one weekly level above it at 1800. The sell to level is 1807. They're all in red. The sell to monthly level is 1799. And below that is 1796. This is what you call a harmonic alignment. And the colors almost blend, at par, so to speak, in one color. Almost blend in one color. That's when the AI identifies the harmonic relationship. So we are now on a bearish trend momentum in gold on the day, and the targets are 1775 to 1765. The silver market, not quite as strong as the silver market, actually. Could not get out to that sell one level of 2657 and reverted, found supply at 2647 in that vicinity, and you can see here the market reverting to close under 2630, which activated a bearish trend momentum. And the target now that we have is 2592 for the silver, with your protective level on a close about 2630. Excuse me. Excuse me. You can see here the market breaking even the trend line support. And so you get a lot of confirmations of the pattern unfolding here, which is a bearish pattern now in gold by trading below the average price, completing the target above. And, it's a pretty clear, transparent methodology that I follow, which is essentially reverse engineering the process of the algorithm that was written in C++ in TradeStation. What you see here are multiple algorithms that we use. We have about 80 algorithms that we run live every day, from futures to stocks to commodities, and we cover pretty much across the board. So depending upon the instrument, the market sector, or pretty much the way that you want to manage the risk, the VCPMI is a really great tool to use as a guide to trade in your futures, whether you're a home office account or an institutional account, an individual account, or a retail account. It is like a GPS that guides you through the structure of the pattern of time in pretty much what time frames, whatever you want to use. We can customize this algorithm to suit the pretty much the pattern of the objectives that you have as far as your trading is concerned. And it can be used for day trading, swing position trading, and it gives you a multiple exponential way of applying the application depending upon your skills. I think once you begin to see the incredible intelligence that this provides you depending upon your skill, the danger is sometimes that you can overload yourself, because it opens up a whole complete dimension in the approach of trading the markets. So coming back here to the market, we obviously are in a bearish mode. The silver as well, we've come down to some support, and let's just watch the levels from here. But I think the path of least resistance that we want to take is that you want to fade the rallies. You want to fade the rallies in gold for maybe the next couple of weeks, maybe till the end of the month. We're looking to lock in some profits up here, hedge, and fade the rallies. Look to sell the rallies, expecting that we're going to come down to the extreme below the means, basically. And we're going to be looking for the alignment in the bigger picture, in the longer term charts. We're looking at the silver market here. The 360-day average price is $25.85, and the buy one level is $25.92. We pretty much are in a bearish trend momentum now, so very high probability that the prices can come down to $25.92, $25.85, $25.70, $25.65. This is the harmonic alignment that we have in the silver market, where you can cover your short positions, your hedges, and get back on the long side. GBTC, we recommended that you add to your position on GBTC. GBTC is the Grayscale Bitcoin Investment Trust, and we're trading a little more actively. So if you are so inclined to take the risk in here, you want to add to your position in GBTC that we've been recommending. This is a long-term, high-risk and trading vehicle that we want to accumulate. It is a virtual asset that we want to accumulate. I have made a point of not discussing the fundamentals because they are, completely, I would say, confusing is a mild word. And therefore, you can't trade this fundamentals right now because they're upside down to what the market wants to do. The fundamentals are indicating that there is a strong momentum in pretty much pushing silver, pushing gold, on the basis that not only the economic, excuse me, not only the economic situation, but also the actual supply situation that seems to be growing and becoming more prevalent, I would say, across the board. We're getting shortages of lumber. We're getting shortages of products, basic products for home building. We're getting shortages of homes. We're getting shortages of, silver, gold. And, when you begin to feel us coming back into the economy, it kind of feels that we're running into a real supply crisis developing. Particularly as we get more normalized in integrating ourselves in this current economy. It's a really mixed picture that, as a trader, it's just, for me, very difficult to trade with, to use it as the basis for my trading. So I have eliminated the fundamentals for now, and I am concentrating on pretty much listening to the algorithm, the VCPMI, because that's taken me through this uncertainty and volatility. As you can see, the momentum is unfolding in gold. We've come back down to that buy one level, penetrating that buy one level now. And here's where the algorithm, once it penetrates this level, it activates a trade alert for you. And it tells you, we have approached a 90% relative implied volatility to the mean. So therefore, the selling concept or the selling strategy below buy one level is a low probability. It's a low probability signal, because if the buy signal is 90%, the short signals are only 10%. Even though you still have another 10% that it can come down to that buy two level, and the momentum, the speculation, the panic, whatever it is setting in here, everybody's getting rid of supply up here, could bring this market down to the extreme below the mean of buy two level, even the weekly. And excuse me, must have swallowed a frog this morning. It would activate the highest probability buy trigger if these signals are activated. So you don't want to go short in here. And once you're in the blue area, you don't want to go short. You want to look for either a reversion to unfold, or for the market now to pretty much take out all of this demand down here, if it has the strength. And that depends upon how much supply, comes in here. So let's see what happens here for the time being. This is activating a trade alert. When the price goes through the VCPMI, it is a trend alert that it gives you. When it activates the extreme levels above or below the mean, it is a trade alert that it gives you. The silver has come down to that 25.92 by one level again. And we want to see, what the market does here. But the thing I want to point out to you is that as I look to trade this market here, particularly in silver, you can see the number of different applications that I put on just to validate the codes and see where it is in relation to the trend lines, in relation to the Fibonacci trend line, the Fibonacci support, this Fibonacci retracement, and also where the bigger numbers are, the weekly numbers. So you can see here where the weekly buy one level is 25.02. And also you can see the integration of the color in blue, all, in this area. So it looks like we've entering a little corrective pattern here that looks to be like almost a fourth wave. This is the first one, Elliott wave, number 2, number 3, and we are entering a fourth corrective wave that can come down into the blue weekly buy levels again to 25.97. That would be ideal position to get back on the long side. And if this is accomplished into the first week of May in particular, it would be setting the market in a perfect alignment with time and price in order for a cyclical reversion to unfold, which is what I believe we're setting this counter trend corrective wave that I think is going to be setting up the market to rally into the fifth wave, the fifth wave pattern. And the fifth wave, using standard Elliott wave analysis, pretty much is double the first. Excuse me, the fifth wave is double the third. The second is double the first, and the fourth is double the third. So we've seen here on the third wave, the market come down from what looks to be the law of 2472 to the recent high here of 2579. So that's almost a solid dollar. So the fifth wave, once we complete this corrective pattern that I think we're moving into the first week of May, let's say if we find the bottom from 25.02, that would be about $27. So yeah, it puts it into that 27.40 area, you see, that we're looking at for the rest of, well, actually it's the end of the week. So we're going to be calculating this over the weekend for next week, but possibly the numbers of the sell 2 weekly level are going to be coming down. And so we'll see what those numbers are over the weekend, and we'll make our adjustments accordingly. But we've seen a reversion unfold here, even though we've acted now a trigger from this level of 25.92. This is a trade alert that I pointed out to you. And so the trigger point for conservative traders is the second close above. And if it closes too high from the buy one level, probably I will pass on it. I don't want to chase this, as the market seems to be experiencing a lot of supply in here particularly. But, you can take the risk if you're a trader according to your profile. What I recommend is, if the entry point, if you're an aggressive trader, you can enter this, and you probably could have gotten out already. This is how fast the market is. The minute it came down to 25.92 and came back up again, aggressive traders can, jump all over it. And from 92 to the high already that was made of 26.13 within the same bar, that's a lot of volatility that you can capture. So I'm waiting for the conservative approach, obviously, with the idea that we activated a short trigger on the weekly at 26.72 here as of the 21st, and now we are completing the targets in between, but the actual target of this weekly signal is 25.70. The target of the sell one weekly level is 25.70 so far. We'll adjust those numbers over the weekend. What we'd like to do is I want to share with you just to go over basically what the VCPMI is all about. This video does a terrific explanation. Testing. That interruption. What we're showing you here is the real live track record that is posted on my website, every day. And whenever we update this, you can come here and see it. But these are the actual signals that are executed. And we started with this account back in February of 2020 with $250,000. And we have realized total of about $2,227,335.10. We have invested open positions of 1,018,654, and our net liquidating value is $1,208,681. We have made a profit of $958,681 net profit on a $250,000 investment. So we're up about 383% since February of 2020. What I do here is I execute the same intelligence that I'm sharing with you for the benefit of my account according to my profile. I use the VCPMI as an indicator to execute the signals here that I post. And I execute them according to my profile. And these are the signals that I've been given for the past 335 one-hour live episodes, just like this one here that I've been doing for Ticket Talker. This account is pretty much current to the latest balances that we're running, that we posted here recently so far, which is for the first quarter as of 3/29. So we make a point of being completely transparent with the way we do things, and pretty much how we coach and teach you as a self-directed individual to trade and apply the VCPMI according to your profile, according to your account. I'm very comfortable where we are. I'm pretty much, we've recommended our traders here for the last couple of days. And if you look at my video even, we've been suggesting to sell into this rally of 92. The signal was activated at 1792, as I pointed out to you. And I make a point of updating in this private room. These are for serious traders. I use this to execute the signals of the VCPMI, which I showed you, I pointed out to you. So we have, different layers of transparency because there is absolutely nothing to hide. Either the program is going to work or it's not. And no matter what I do, I'm not going to change the end result. But what we're doing here is how the program is working in real time. So we're looking at again a potential reversion unfolding for the short term for the next couple of weeks, and it will give us just an incredible opportunity upon completion of this pattern that needs to be completed in order to satisfy the process of the cyclical structure, you might say, that we're looking at. want to share with you pretty much a letter that went out to our subscribers here yesterday regarding the gold market. Gold, time for a reversion unfolding. Don't listen to the fundamentals for precious metals. They are extremely bullish, yet gold is under 1,800. Bitcoin is still at extreme highs. We're moving into a virtual economy, and investors are losing faith in the US dollar and searching for alternative investments not tied up to fiat currencies like the dollar. This process was already happening, but pandemic sped it up. The discrepancy between physical precious metal prices and the paper markets continue. We are facing physical shortages in gold and silver, yet the paper markets continue to move down. Supply chains are strained. In construction, building is slowing because of significant increases in lumber and other material costs. The pandemic broke the supply chain, and we are just now seeing some of the effects. We are waiting to see how the pent-up demand, when it is released, is going to affect prices. Real estate, for example, is rising fast and low supply and increasing demand. We are probably going to see shortages in almost everything as we reopen the economy, and prices are going to skyrocket. Gold is breaking out in a fast market as of when we wrote this report. Last at 1790.40, and silver at 26.46, up 62 cents. The market has followed through on the acceleration of the bullish trend momentum that was activated by the market trading above that 1775 level. We have a perfect reversion to the mean with the variable changing price momentum indicator, the VCPMI daily, weekly, and monthly targets being met at 1732. This was the weekly. This was the weekly VCPMI low, from which gold reverted right back up on the 14th to 1799. And the weekly sell one level is 1800. So this is a significant area in which to lock in profits if you have been long. Aggressive traders can short gold at these levels. We're going to wait until we see whether the market is going to move to a higher level, which is unlikely, or is going to revert back down, which is far more likely to happen. If 1792 is met for the weekly target, then it becomes support, and the monthly level becomes the target above 1800. If we do activate a short trigger, it will be a short-term counter trend. This is what I need for you to keep in mind, that this is not a reversal of the trend. This is a counter trend. So keep your core long position in gold. But if you do go short from here, put a protective stop right above 1799. The targets of 1792 and 1786 have been completed. In silver, it has not yet activated the short trigger as we wrote this report, and the VCPMI sell-to level is 2634. And we got up here at 2646 and reverted, so it completed this target of the report, which was activated. This is the area of distribution of supply, which means there are high probabilities that sellers or supply are likely to come into the market at this level, and exactly what it did. There is room for the market to hit 2672, but if you're in a profit from around 25, obviously we recommend that it take some profits. The probability is that precious metals are in an area of resistance, particularly if gold reaches the VCPMI sell 2 level of 1799. We will probably hit 1810, which is the 360-day cycle average price. But we are likely to see gold revert back down to the weekly mean of 1762. Or even 1700, which is still in the cards, for this week. So far, we're ending the week, and we're at 72 now from the 1792 weekly signal. So far, it's possible it could be completed here by today. Not sure about the 1700, but maybe into the end of this month, I think we could potentially test that target. Then we could be setting up for a summer rally once this test is completed. Given the volatility in the precious metals markets, they are not for every trader. You need to educate yourself and learn how to trade these markets. The VCPMI can help guide your trading, but you need to learn how to use it. If you're an experienced trader or know how to use the VCPMI, these are great markets that offer tremendous opportunities to build wealth. I wanted to share this report, this memo, so to speak, with you because I think it's important that you, again, are aware of pretty much what we're doing. I'm not saying that this is the only it's a perfect science and the only indicator and so on and so forth. No, this is one of many indicators that are used except that this is a very distinct model that we use, which is a contrarian model. It's a probability model. It's a mathematical model. It doesn't include fundamentals, but it does trade the technicals of the market. And it's a combination pretty much of Fibonacci, Gann, Elliott wave, vortex mathematics, and all combined into this simplistic, you might say, representation of a very complicated and complex algorithm. And we have tried to simplify this process basically so that you as an individual trader can follow and use this as a GPS for your trading. The silver market is activating a buy trigger for the day. It activated a buy trigger at 25.95.50. So the AI was validated once again by telling us not to sell into this, but actually to buy into this. And so if you are inclined, to trade the market, this is a buy signal here, activated in silver. You can buy it at the market. And the target is 26.30. You can put your stop at 25.92. You can use the 3 choices of stops that we give you. And you can, pretty much structure the trade with the stop, the target, and what the market is going to do, what it's going to do anyway. So what we teach you also is that if you enter into this trade and you do multiple positions, take the first 300 out and book it. If you get a chance to book that profit as quickly as I can, especially if you have multiple positions. So the application of the VCPMI is pretty much according to your profile, depending upon your financial profile, your risk tolerance and money management. The application also in what instruments and so it's all about managing the risk. Once you identify the signal, what instrument you're going to use to manage the risk, and how to create a portfolio that will make sense. For example, we're looking at the long-term aspect of the market. Even though I'm talking short-term, we are carrying a core position long-term since 1677, even actually 1500, going back to the first time that we activated the 360-day cycle. And I believe that was about 2019, 1819. So the cycles are moving higher. The highs are becoming higher highs, but we will trade the market, you might say, accordingly, because we got to follow what the market does. And here's the contradiction of having a short squeeze situation in silver and the market trading in this range now for 7 months. And actually, the silver market is stronger than the gold market because the gold market came down from 2089 to 1167, and the silver market actually made a low of 2374. So I think the gold market, first of all, is leading the way. I think the silver market is lagging the gold market because even though the market made a high of 2089 on March 20th, August 2020, the silver market did not. So the pressure has been in the price of the silver market from preventing it to unfold to its real mean, particularly in relation to to what we saw in 2089. So the thing that made the silver market move to a high of 3035 was actually the Reddit raid that came in that squeezed, you might say, the short sellers in the market and precipitated this blowout of 3035 that turned out to be a major top in the market. And then it reverted from there on extremely tight supplies to a low of 2374. Unbelievable. Almost a $7 decline from this short squeeze alert that came into the market. So now the market found its fair value, actually undervalued, because it traded below the extreme, below the mean. It has reverted from you can see the blue levels, activated a buy trigger from the 2444 level, and has completed or close to completing the sell one level. Actually completed for silver the sell one level of 2672 and activated a short trigger with 2570 as the target, the weekly mean. So the silver market is in a bearish weekly trade signal. Which is supporting the fact that I'm comfortable where I am, and I want to see the market come down and test these extreme levels below the mean. But here's a trade that was activated, and if you're willing to take the risk, you're long from 25.95, 50, it's 25.99. Now you can bring your position, your trailing stop to break even, and you let it go. So now you're protected on break even. The worst case scenario is that if this comes down, it'll stop you out of break even. You're gonna you got nothing to lose, but you got everything on the upside. So you're locked in the structure, the risk, and the target will get there whenever the market decides to get there. The market will do whatever he wants to do whenever the time is right. This is not a guarantee. This is not any of those things. This is a probability model that we use and we trade, and we've been trading it very, very successfully. And I hope you, ladies and gentlemen, that you come here once again every day, you're getting the understanding of this incredible contrarian trading tool that you can use for your trading, guiding you on your trading, depending upon your profile. The silver market is activating a day trade long signal. And the gold market is still trading under the buy one level. The buy one level is 1774, 1775. So that would activate a buy signal in the gold market. So far, the only signal we have is in silver, but you never know. It's early in the day, and so we can still see a lot of activity here, a lot of volatility the rest of the day. $26 traded, and silver. It looks like now silver may be leading the way. We are looking to see where this buy signal here is going to take us to on the day trade. So continue to hold your core position long. It looks like we are entering a buy signal for day trading in the gold and the silver market here. So keep an eye on that, and good luck with the trade. If you entered it, use prudent money management, I would say, in doing the size according to your profile. And good luck. Thank you again for the opportunity to share this with you, and I'll see you next time. You be well. Take care. Talk to you soon.
The risk of loss in trading commodity interests can be substantial. You should therefore carefully consider whether such trading is suitable for you in light of your financial condition, and considering whether to trade or to authorize someone else to trade for you. Past performance is not necessarily indicative of future results.
We continue to see this rally, especially in big tech. The Nasdaq Composite again finishing at a record high. Whether you're looking at valuations or technicals, it seems that